Okay, welcome to this weekend market analysis. As usual, we are just going to go straight to the point, analyzing the charts to see where we have potential value trading opportunities. Well, we've gotten for last week, we saw a little bit of market momentum, price action was a bit improved, but then trading opportunities were quite limited. Okay. Well, let's now look into the Forex Factory economical calendar to see those high impact news announcements that are scheduled for this upcoming trading week. As you can see, still a few high impact news announcements. That's because economic activities globally is yet to take to resume on full scale as the coronavirus pandemic continues to bite hard. As you can see, the FOMC is scheduled for this week. That is the most highest of the high impact news announcement that we have here. So you need to be extremely careful with all American dollar crosses on Wednesday, the 29th of July. Okay. Again, remember this month of July will be coming to an end on Friday. So Friday will be the last trading day for this month, and as such, as the month is coming to an end, you should expect some abnormal market volatility as the monthly candles will want to sign off. All right, let's look into the let's look into the charts right now and see some of those pairs. Let's begin with the euro against the American dollar. This is the weekly time frame. For those of you who have been following our analysis for a very long time, remember we kept on saying that the euro against the American dollar was at an optimal area, somewhere around in here, to look for buy opportunities. We said that many times, and as you can see, price is making the move to the upside. Well, we have not really seen that this bullish buyers will end any moment soon. What you might see, it might be some pullbacks and continuation move, some pullbacks and continuation move. The American dollar is in bad shape, and of course, we want to take advantage of that. Right now, as you can see on the chart, the price has been able to break above a key level that has been holding price as both support and resistance. Below is support and above is resistance. Right now, price has broken above that key level. Well, we are hopeful that that breakout will be sustained. If you look into the weekly time frame, it is obvious that this area, that area right there, that has been holding price right there, here as resistance, has now been taken out. So we'll be waiting very patiently to see if we can get pullbacks to that area. If we see any pullback, that is the best point to look for your next buy opportunity. For all of these moves, well, we haven't missed any trading opportunity. The moment we should begin to trade this pair, the euro against the American dollar, is once we have that pullback. This is the point to look for your valid long entries in the euro against the American dollar. For now, the breakout is still happening, and we still anticipate that price will push to the upside. In fact, price might go all the way to the 1.18 level. 1.18 level price might still keep pushing to the upside. All right, so you really do not want to go short. Remember, in our last review, we mentioned this bullish price action, and we told you not to go short. So technically, you can find this area here as the anticipated area of resistance for the euro against the American dollar to go to. All right, the upper boundary of this level. Remember, price tends to move in some form of channel, right? So somewhere around in there, the 1.8 the 1.186 area, 1.186 area should be the next area for price to move into. That means it might still make some bullish movement, so be very careful. If you want to look for long entries, then you need to wait around this level. This is the level of support, and this is the level of resistance. So if we have price make some movement back a bit, from here on we'll be looking for a buy entry to target that area. Okay, so it's still bullish right now, but no valid setup for us to trade. All right, the Australian dollar against the Japanese yen, I just want to show you that price is trading around a key area of resistance. In fact, let me extend this level. That's it there. A key area of resistance. Resistance there, resistance there, resistance here. Last week Friday we got that reversal formation around that key area of resistance. So looking for a trade, all right, with this kind of candle is not a bad idea. That candle is a signal that the next move could be to the downside. So price action traders will begin to analyze how to take a trade given that type of price formation, which is a bearish signal. For those of you in the VIP channel, of course, we will let you know. We'll send the signals to you on how we intend to trade this pin bar that has happened off that key area of resistance. If you look into the monthly time frame further, you will see that price is actually trading around an area of our monthly resistance as well. So it's not a bad idea to look for short opportunities at that particular area of resistance. All right, in the daily time frame, quite mixed, really mixed with that thin price action that we got for so many days. We just saw improved volatility as of last week. So let's see what's going to happen with that weekly candle, which might give some nice bearish movement. Similarly, the New Zealand dollar against the Japanese yen, let me zoom in a bit. You will see how price has been finding resistance. Okay, this is support right there, resistance there, resistance there, and again you can see the reaction of that level of resistance. Let me place a line there and place mark that level. Okay, need to change that color to blue, signify a weekly level of resistance. Okay, it's a key level of resistance because it has been holding price both as support right there and resistance, then resistance. So the most latest reaction is this one here, which is a pin bar, also giving the hint that the next move will be to the downside. All right, so we need to take advantage of this, and of course you can see the monthly line, this one here, running as an area of resistance. That means we got a bounce of a possible point of confluence. So let's look into the monthly time frame. Monthly time frame, you can see that that trend line I was talking about, area of resistance. So of course the weekly candle could be a stronger hint that price will push to the downside. So now of course those of you in the VIP channel, don't you worry, we will let you know how we intend to take this trade. All right, let's move on to the next pair, the euro against Australian dollar. Well, this is quite sad for us. We actually scored a loss here. We're looking for buy opportunity, and what actually happened was that price came all the way to trigger our stop loss, then immediately it is pushing back up. The directional bias is actually right, but then we don't really intend to tweak our stop losses. We placed it there, no problems, it took it out, we were in the right direction, but then some sort of stop loss hunt. And as you can see right now, the euro against the Australian dollar is actually very bullish, as you can see with that candle there. That hint is a sign that we will see some heavy bullish momentum in this pair, and so you need to be extremely careful going short. The decision to trade this candle is still not clear, but we will let you know. It is still very bleak, but then it is still in terms of this hesitation right there. So we need price to move away from that hesitation. In fact, in the daily time frame, you will see that range. This is the range. You see the fake breakout right there to trigger all stop losses. Then from there on, price is now pushing to the upside. So we're following the daily time frame. We need to wait for price to move away from this level of resistance. We really do not want to click on our buy button on this level of resistance. We need price to move away, then maybe make some pullbacks. From there on, we can join the move in this pair. The best directional bias for the euro against Australian dollar at this time is to keep looking for long opportunities. Okay, all right, American dollar against the Swiss franc. Yes, we also traded this pair. In fact, we were looking for short entries somewhere in the air, anticipating this move that has happened, but price got too volatile and too tricky as it ranged in the daily time frame. For those of you that were trading with us, of course you will remember that we took the trade somewhere in here. All right, this pull back there took us out we took some profit, then it took us out on the second half at a break-even position, no loss. But after then you can see the straight fall. That was a straight fall to the downside. There was no opportunity to jump in, and so we didn't miss any trades, and we have no regrets. Now we have a flat bottom triangle. So if price is able to make a pullback to that zone, this is the sell zone. From there on, we'll be looking for short entries. But as long as price makes a straight move without giving an entry, we will not take any trade. All right, it is a matter of principle and a matter of strategy. We will not take the trade once there is no entry. Okay, so for the American dollar against the Swiss franc, we're likely going to wait for price to make some pullbacks. Then from there on, we will come back down. Another point to look for entry will be somewhere around in here. All right, right there, price should come back down. We may not get the pullback all the way to that level. That may not happen. That may not happen. What is likely going to happen is a pullback to somewhere in here, then fall back down. Why is that level significant? Well, do some counter trend line connection around that area. See that? Zoom in this chart for you to see clearer. Okay, that's it. You can see how, let me take this level. All right, you can see how price went to, that is support right here, found support again right here. All right, support, then it broke that level. So the next thing you will expect is the price to come all the way to retest that level from below, which may now act as resistance, and from there on we will see price going back down again. So that is what is likely going to happen. Do not expect price to make that pullback all the way to that area. It might be extremely difficult to get that. Okay, all right, so that's it. American dollar against the Swiss franc. We are ultimately bearish. We'll be searching for short opportunities, but then we'll be extremely careful to cash out profits on time as price is trading around the monthly level of support. Okay, let's move into the next pair, the American dollar against the Canadian dollar. Well, this has been bearish and price is likely still going to be bearish. We need to search for short opportunities only. Look into the daily time frame. I'm more interested in this flat bottom triangle where we got that clean level of support, broke out, got the breakout. All right, price gave a breakout right here. So what are we expecting? Again, a pullback. From there on, we'll look for a nice short entry. This will be a nice trading opportunity. As you can see, last week we saw that momentum. That's because majority of the pairs were breaking out of some ranges, like this one here. For several days it was in a range, very difficult to trade. Then last week we got a breakout. Okay, so we need to wait for the pullback, and from there on we will search for our valid entry for a continuation move. Okay, all right, so that's it. American dollar against the Japanese yen, another one. Remember, we had analyzed this pair before. We talked about this monthly channel and that the directional bias should be to the downside. If you remember that, if you look into the weekly time frame, not really clear. Let's move into the daily time frame. In the daily time frame, you can see that price is now trading around a key level that has been holding it as support, and right now it is trading around that support level. But in the 4 hours time frame, you will see that flat bottom triangle that has been taken out nicely. Okay, let me see this flat bottom triangle that has been taken out really nicely to the downside. So should we get a pullback to that zone, then we'll be looking for a valid short entry again in this pair. Just like the American dollar against the Swiss franc, well, it may also be difficult to get pullback to that area. If you connect this bounce here, this one here, you might have price move all the way to this area, then from there on back down. Okay, that is likely going to happen. These are quite difficult market scenario to trade, but then we will keep following, and I believe that as soon as the pandemic begins to clear off, we will get better price action and make more money. Don't you worry, just be patient, keep trading, and we can assure you that you will not lose your account. Okay, you will not. Even if you're having some losses, don't worry, you will recover them in no distant time. Thanks for being here. Thanks for watching. If you have questions or contributions, if you want to join the VIP channel, feel free to join to contact us, and we will add you up where you receive all of our trade signals and how we manage the trades till the end. Thanks again for watching. We'll talk again probably before the London market opens. Do have a nice time. Bye bye.